Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of fixed asset. What is a fixed asset? What are the journal entries when the fixed assets are purchased? How these fixed assets should get reported in the financial statements? All these details I would be covering in this video. Fixed assets are the assets which are being purchased by the organization in order to generate economic benefits over a period of time. Okay? These fixed assets are primarily classified into two categories. One is the tangible fixed asset and the next one is the intangible fixed asset. What are the examples of for an tangible fixed asset? Plant, furniture, machinery, fixtures, etc. What are the examples for an intangible fixed asset? Patents, copyrights, technical know-how, etc. Okay? Fixed assets are not held for resale. Okay? Fixed assets are valued at a historical cost. Historical cost means the cost at which it is acquired, which includes purchase price plus any incidental expenses which has been incurred to acquire the fixed asset. Incidental expenses could be transportation expenses to transport the fixed asset from the vendor place to the factory, and also installation expenses which has been incurred to install the fixed asset, and if any wages or salaries has been paid for on the man hours which are being spent by the laborer to install that fixed asset, all these things would get added up to the purchase price of the fixed asset in order to derive the historical cost. Okay, right. These fixed assets, there is a useful life attached or designated to these fixed asset. Okay, and there will be a decrease in the value of the fixed asset because of the wear and tear or passage of time. The methodology which has been adopted to compute the decrease in the value for the tangible fixed assets is the depreciation. Okay, and the methodology which has been adopted to compute the decrease in the value for the intangible assets is the amortization. See, what is the depreciation and what is the amortization? How these concepts are exactly, all these things would be provided in the video which would be posted in my channel soon. Okay, with this introduction, let's move to the next slide. In this slide, there is a cycle, there is a diagram which depicts like a cycle, which is nothing but the accounting cycle. What is an accounting cycle? What are the phases of an accounting cycle? All these details I had already shared in my previous video on accounting cycle, and also I would be providing the link in the below box. Request the viewers to go through that video before getting into the details of the current video on fixed asset in order to gain better understanding of the current concept. Okay, now as mentioned, I would be considering the phases of accounting cycle in order to explain my concepts. Okay, as a first phase, which is a business transaction, purchasing of fixed asset is a business transaction. Okay, hope this is clear. Let's move to the next phase of an accounting cycle, which is a journalizing phase. When the fixed assets are purchased, normally the business entity would be receiving the fixed asset, and in consideration, business is supposed to pay the money, right? So the entry would be fixed asset account debtor to bank account. Now tell me, what is the what is the account which this fixed asset primarily falls? This is a real account. Okay, what is the golden rule for a real account? Debit what comes in, credit what goes out. So what the business would be receiving? Fixed, the business would be receiving the fixed asset. What the business is supposed to pay in order to receive the fixed asset? The business is supposed to pay the money in terms of cash or bank. Okay, hope this is clear. Now let's move to the third phase of an accounting cycle, which is ledger postings phase. What is the ledger posting phase? For whatever the journal entries which were created as part of generalizing phase, for those accounts, the ledger accounts are supposed to be created in ledger postings phase, and the entries are supposed to be posted in the respective ledger accounts. Okay. So what are the ledger accounts are supposed to be created in third phase of my accounting cycle? One is the fixed asset account and the other one is the bank account. So we will create these accounts in the ledger posting phase and the entries would be posted accordingly. Okay, hope this is clear. Let's move to the fourth phase of the accounting cycle, which is a trial balance phase. Trial balance is nothing but the summary of the balances of the ledger accounts. Okay, right. There are two ledger accounts were being created as part of third phase of my accounting cycle, which are fixed asset account and the bank account. The balances for these accounts are supposed to be updated in the trial balance. Okay. The balances under the debit side of the trial balance and the credit side should get matches up, because as we have been following double entry system of accounting, so ideally the amounts on both sides should get matches up, which means the debit should equal to the credit. Okay. Now let's move to the last phase of the accounting cycle, which is a financial statements phase. What are the primary elements of the financial statements? One is the income statement and the other one is the balance sheet. Okay. As these are real accounts, which is fixed asset is a real account, bank is a real account, then these accounts doesn't impact my income statement, because my income statement would get impacted only by the accounts related to the things which falls under nominal accounts. As these entries are falling under real accounts, this doesn't impact my income statement. Now these would impact only my balance sheet. My fixed asset would get reported under the asset side in the balance sheet, and also my bank account would get reported under the asset side in balance sheet. Hope this is clear. With this, I hope the viewers are able to understand what is a fixed asset, what are the journal entries for fixed asset, how these fixed assets should get reported in financial statements. All these details, I hope the viewers are able to understand this concept. If the viewers are really like my video, request you to like it, share it to your friends and subscribe my channel for more videos. Thanks for watching. Catch you in the next video. Hi all, welcome to my channel Satish Vlogs. In this video, I would be providing details on depreciation. What is a depreciation? What are the journal entries for depreciation? How this depreciation should get reported in financial statements? All these details I would be providing in this video. As everybody are aware, the value of the assets would get reduced because of the various factors like obsolescence, wear and tear, etc. Right? So depreciation is an accounting method which allocates the value of the asset over the life of the asset. Okay. And the concept of depreciation is applicable for the tangible fixed assets. And this depreciation is a non-cash expense, which means there will not be real outflow of the cash from the business entity. This depreciation would be charged as an expense in the income statement, and there will be a tax benefit out of it to the business entity. And also the prominent methods for charging the depreciation are straight line method and the written down value method. This depreciation would be charged in such a way the benefits which are going to get generated from the fixed assets would get equates with the charge which is going to be made in the income statement. Okay, with this introduction, let's move to the next slide of my video. In this slide, there is a diagram which depicts like a cycle. This is nothing but the accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All these details I had already provided in my previous video on accounting cycle. And also, this depreciation would get charged on the tangible fixed assets. So, what is a tangible fixed asset or fixed asset? What are the journal entries for fixed assets? How these fixed assets should get reported in financial statements, all these details even I had provided in my previous video on fixed asset. And for both these videos, I would be providing the links in the below box. Request the viewers to go through those videos before getting into the details of the current video on depreciation to gain better understanding of the current concept. Okay, as mentioned in my previous videos, I would be explaining the concept considering the phases of an accounting cycle. As a first phase of my accounting cycle, which is a business transaction, depreciation expense is a business transaction. Okay, hope this is clear. Let's move to the second phase of the accounting cycle, which is a generalizing phase. As depreciation is a nominal account, what is the rule for the nominal account? Debit all expenses and losses, credit all incomes and gains. So as depreciation is an expense, so depreciation account should get debited. Okay, and to which account we are supposed to get credited? Which is a accumulated depreciation account. What is accumulated depreciation account? This is a temporary account which has been created in for the better presentation in the financial statements. Okay, and whatever the amount which gets accumulated under accumulated depreciation account, which would get reduced from the cost of the tangible fixed asset in order to show the net value of the tangible fixed asset. Okay, so hope this is clear. Let's move to the third phase of my accounting cycle, which is a ledger postings phase. What is a ledger posting phase? For whatever the entries which were made as part of generalizing phase, for those accounts, the ledger accounts are supposed to be created, right? And the entries are required to be posted accordingly. What were the accounts which were created as part of my generalizing phase? Depreciation account and the accumulated depreciation account. Now, these accounts are supposed to be created in ledger posting phase and the entries would get posted accordingly. Hope this is clear. Now let's move to the fourth phase of my accounting cycle, which is a trial balance phase. What is a trial balance phase? Which is nothing but the summary of the balances of the various ledger accounts. See, for how many ledger accounts were being created as part of the third phase? There were for 2 accounts the ledger accounts were created, right? One is the depreciation account and the other one is the accumulated depreciation account. The balances for these accounts, 2 accounts, should get updated in the trial balance. And the balances which are shown under the debit side should get matches up with the balances which are shown under the credit side. Because as we have been following the double entry system of accounting, there shouldn't be any discrepancy between debits and credits. Okay, hope this is clear. Now let's move to the last phase of the accounting cycle, which is a financial statements phase. What are the primary elements of the financial statements? One is the income statement and the other one is the balance sheet. In the income statement, as mentioned previously, this depreciation being a nominal account, it should directly hit the debit side of the income statement. Okay, and in the balance sheet, whatever the accumulated depreciation, that we consider it as a contra account, and whatever the amount which gets accumulated as part of accumulated depreciation should get reduced from the historical cost of the tangible fixed asset, and the balance we would be showing as a net value of the tangible fixed asset. Okay, hope this is clear. With this, I hope the viewers are able to understand what is a depreciation, what are the journal entries for depreciation, how this depreciation should get reported in financial statements. If you guys really like my video, request you to like it, share it to your friends, and subscribe the channel for more videos. Thanks for watching. Catch you in the next video. Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of amortization. What is an amortization? What are the journal entries for amortization? How this amortization should get reflected in financial statements? All these details I would be explaining in this video. As everybody are aware, the value of the assets would get reduced because of the passage of time, irrespective of the usage, right? An amortization is an accounting methodology which is helpful in order to allocate the value of an intangible asset as an expense over the life of the asset. The examples for an intangible assets are trademarks, patents, copyrights, licenses, franchise, technical know-how, etc. This amortization is a non-cash expense. What does it mean? There will not be any real cash outflow from the business operations. This amortization would be charged as an expense in the income statement. So there will be a tax benefit out of it. This amortization would be charged as an expense in such a way that the expense should get equates with the benefits which are going to get generated from the intangible fixed assets. Okay, and also for the better presentation and reporting of the intangible fixed asset, there would be an contra account which is accumulated depreciation would get created, and the depreciation would get accumulated as part of this account, and the same would be reduced from the cost of the intangible fixed asset in order to derive the net book value of the intangible fixed asset. With this introduction, let's move to the next slide of my video. In this slide, there is a diagram which depicts like an accounting cycle, right? This is nothing but the accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All these details I had already provided in my previous video on accounting cycle. And also the concept of amortization is related to the intangible fixed assets. Okay, and what is a intangible fixed asset? What are the journal entries for fixed asset? How this fixed asset should get reported in financial statements? All these details were already been provided in my previous video on fixed asset. I request the viewers to go through these two videos before getting into the details of the current video on amortization for the better understanding of the current concept. And also I would be providing the links for those two videos in the below box. As mentioned previously, I would be explaining my concepts considering the phases of an accounting cycle. As a first phase of my accounting cycle, which is business transaction, amortization expense is a business transaction. Hope this is clear. Now let's move to the next phase of an accounting cycle, which is journalizing phase. What is the journalizing phase all about? For whatever the business transaction is there, for that business transaction, journal entries would be recorded. What is a journal entry for amortization? As amortization is an expense, so the expense should get credited as per the golden rule of the nominal account, which is all expenses should be debited and all incomes should be credited, right? So as the amortization is an expense, the amortization expense should be debited, and to which account the credit should be given, which is accumulated amortization account, because as stated in my previous slide, for the better presentation and reporting of the fixed asset in the balance sheet, will not be directly charging this amortization to the intangible fixed asset. For that, we would be reporting in such a way that we are accounting the amortization as part of accumulated amortization account, and whatever the amount which gets accumulated as part of this account would be reduced from the cost of the intangible fixed asset, and from there we would be deriving the net book value of the intangible fixed asset. Hope this is clear. Now let's move to the third phase of an accounting cycle, which is ledger postings phase. What is this ledger postings phase all about? For whatever the entries which were created as part of journalizing phase, for those entries the ledger accounts are supposed to be created and the entries are required to be posted accordingly. What were the entries which were posted as part of the second phase? One is the amortization expense account and the other one is the accumulated amortization account. So ledger accounts for these two accounts would be created in the third phase. Okay, hope this is clear. Now let's move to the fourth phase of an accounting cycle, which is trial balance phase. What is the trial balance phase all about? Which is nothing but the summary of the balances of my ledger accounts. Okay, so the balances of the amortization expense account and the accumulated amortization account are supposed to be updated in the trial balance. So the balances under debit side in the trial balance should matches up with the balance which is shown under the credit side of the trial balance. There shouldn't be any discrepancy, because as we have been following the double entry system of accounting, so ideally there shouldn't be any discrepancy between debits and credits. Okay, hope this is clear. Now let's move to the last phase of an accounting cycle, which is financial statements phase. What are the primary statements as part of these financial statements? Which are income statement and the balance sheet. As already stated in my previous slide and also in the current slide, as this amortization expense is an expense, so it will directly hit as an expense in the income statement. Okay. And regarding this accumulated depreciation, as I had already stated, this accumulated depreciation would get reduced from the cost of an intangible fixed asset in order to derive the net book value of the intangible fixed asset. Hope this is clear. Okay, with this, I hope the viewers are able to understand the concept of amortization, what are the entries for an amortization, how the amortization should get reflected in the financial statements, all these details. If the viewers like this video, request you to like it and share it to your friends and subscribe my channel for more videos. Thank you. Catch you in the next video.